Let's talk to Bhavin Shah now about how he's analyzing the market. Bhavin is a very experienced analyst and of course runs his own firm now, but has been around for long, seen many cycles. Bhavin, good afternoon. Let's start by chatting about an area which you understand way better than many on the street, and that is technology. Both the ends of the technology, Bhavin, how are you really putting at work the mainstream kind of companies, the top 4 and mid cap IT, that kind of companies, and also the new age technology companies, which some call platforms as well, but technology enabled new age consumer companies. How are you approaching these two pockets actually broadly under the technology umbrella? Bhavin, can you hear me? Oops, I think Bhavin is not being able to hear us. We'll get back to Bhavin in a moment from now. Meanwhile, let's take a look at the market. Market is trading at days low now. In fact, Maruti and Tata Motors from the auto pack are doing okay. Some of the banks, select banks like HDFC, Axis are taking a green tick. But overall, what is under pressure? Sun Pharma is under pressure, Tata Steel is under pressure, Grasim is under pressure. Do we have Bhavin back, guys? Bhavin, let me try and speak to you again. Can you hear me better now? Right. Okay. So we'll try and connect with Bhavin in a moment from now. Let's get some of our colleagues to talk about how the earnings, many of the earnings are actually coming after the market hours. Bharti is one number to watch out for. Let's try and get in Sunita Nagpal to talk about how Bharti numbers are going to be. Meanwhile, let's pull up how Bharti is trading right now ahead of the numbers. Yesterday, we saw a big spurt of almost 5%, but that is not the case today. It has all flattened out to just 0.5%. Sunita, tell us, how are the numbers likely to be this time?
In past few quarters, and that's a trend we are likely to see in this quarter as well. However, we are expecting that the churn will go up in this quarter, and this will be largely because if you remember in the month of July they had discontinued the lower end of recharge of 49 rupees, so that would mean that they would lose some subscriber. We are expecting then the subscriber loss of 1.8 million in this quarter. However, because of the discontinuation of the lower end of the recharge, we are expecting ARPUs to go up by 4%. We are expecting ARPUs to come at 154 versus 146 in the previous quarter. As far as the company's Indian mobile services are concerned, we are expecting revenues to grow at 4%, while margins will grow at 6% in this quarter. However, overall we are expecting the revenue growth of 3.2%, margins to improve by 20 basis points. But the main thing that you need to watch out is the management commentary, especially on the ARPU trajectory, whether when can be their next hike that the company can take, whether this hike can be without Geo or.
We have rectified that error. Bhavin, can you hear me better now?
Yes.
Great. Bhavin, where do you find, first of all, thanks very much for your time, Bhavin. Tell us, where are you really finding attractive risk reward in this kind of a market in your analysis?
I think, it's we continue to find opportunities in financial space. We're just starting to see financial services companies putting together good numbers. We have not yet seen a strong credit growth, but I think that may come. So I think that space actually still looks very attractive, relatively speaking, and also in some cases on an absolute basis. So that's one area that we.
Bhavish, where in financial?
And then beyond that, it's just like if something has. Sorry?
Bhavin, where in financials? Is it the large cap PSU banks or select PSU banks, or is it the private banks? And if private, then what kind of private bank? Kotak kind of variety, or do you want pure ICICI Bank Axis variety, which are more corporate?
So PSU banks, obviously, there is some strong, views out there about PSUs being bank being a great story, and maybe there is an opportunity there. But today we are not yet dabbled into that area. We're still trying to understand how much of the improvement is structural, how is governance standards improve structurally. But some of the large private banks, you mentioned a few names, ICICI Bank, for example, has demonstrated over the last 2 years that their governance standards have improved significantly with respect to their lending practices, and they've definitely by far the leader in technology when it comes to the big private banks, far ahead of their peers in some areas. And in my view, technology is becoming an important differentiator for these banks in terms of how they basically service the customers, how they look at the business opportunities. And I personally see that really also helping ICICI Bank. And so and I think the re-rating of ICICI Bank has been going, I guess, ongoing on, but it's not complete yet. I think there is no reason today, I feel, that should trade at any discount to HDFC Bank, for example. And I think the growth is definitely higher at ICICI Bank. So it definitely looks like a good opportunity.
Right. Bhavin, how are you analyzing the mid-cap space? What kind of themes are you researching? You are sitting at a hub of chemicals and textiles. Do you like some names there? Chemicals seem to be going out of market favor, but when we speak to managements, the businesses are rocking. What is your view there?
Yeah, I think you can. Chemicals will remain a story for India for a number of years to come. There is a lot of investments taking place. New capacities being added, companies getting into downstream products, more of a specialty chemicals, and I think so. I think there are incentives in place. Also, and in some cases, companies are kind of doing a more of an integrated approach. So opportunities will definitely continue to be there in the chemical space. One has to really decide what kind of risk one wants to take. Does somebody want to go into more of a flavor of the kind of time, sort of names where there is a short-term story, or really focus on companies which are really building a very strong portfolio, which kind of stands, taste of time. So I definitely see that opportunity there. Textile is like, is a sector where there's far many moving parts. And so I think, it's probably, we're less inclined to get into that, to be honest.
What kind of conversations are you having with your clients, or even in the peer group? Is there some kind of a hesitation now building in approaching the market with fresh capital? Are people wanting to write down whatever they've invested in? What is the sense you're getting when you speak to some of them?
So I think there's probably some bit of hesitancy for sure. I think in the last few couple of months, I think where I feel that many of the peers you mentioned, I think maybe there's some bit of the holding of cash that I think is probably prevalent, a less inclination to put new money to work. And I think, but it's really on an individual basis. I mean, I think if you find an opportunity, we are still willing to deploy capital. But obviously, we will evaluate, what if, for example, the interest rate cycle kicks in, what is the impact? If crude stays at these levels, what would be the impact on the business? And try to reduce our risk from that standpoint. So even though, for example, we may be very bullish on a name like, say, Interglobe Aviation in the aviation space, we may be a little careful about putting a lot of money to work, given what is happening with crude prices. So I think it's really, trying to kind of basically take note of the risks involved. And also the other thing one has to keep in mind is that if indeed there is a sharp correction in the market, obviously small and mid caps can be hit harder. So also be very careful in terms of. So if you buy something there, one must be willing to hold it for a longer period. Even if there is an in-between correction in the name. So that's sort of how I would say, approach. I think investors are still, I think that there are a set of investors who are still looking at the market as as a opportunity with some caution. I think in India story looks really promising in a very very long time. Actually, I think we had that period post 2008-9, which was a very long period of difficult environment for Indian economy, and then there was years of cleaning up of balance sheets and bad loans and so on, and then came some of the disruptions that we saw with demonetization, COVID, and GST, and then COVID. I think if all these factors are behind us, and in between a lot of decisions have been taken, a lot of reforms have taken place, I think the platform is set for a very robust growth in economy over coming years. So I think that keeps some level of optimism also about the market even at this levels.
Because I was just reading a latest report from Chetan Aya, and he also kind of was making a case that the signs are something which similar were in 2003, 2008 kind of a phase. And if that economic expansion happens, then financials perhaps may turn out to be an area to be in. Bhavin, what about capital goods? Would you also like to play cyclical there, engineering and capital goods?
I mean, we are not averse to play, investing in there, but we currently don't have, don't have much. We'll keep. I mean, things that we liked, maybe they run up a little too fast for us. We miss them. So we won't chase. Our philosophy is very clear. Whatever we invest, we have to see an ability to earn returns which are above our minimum hurdle rates based on the risk of the business and the volatility and the liquidity in the stock. If you don't find that, we are okay not owning it. We don't have to own anything per se. So we currently don't have anything in that space. But yes, the opportunity probably is there for to keep looking at that space.
We had you on a bit of a scratchy line. We'll try to make up for it next time. Thanks for your time this afternoon.
Thank